I always say that you could publish trading rules in the newspaper and no one would follow them. The key is consistency and discipline. Richard Dennis. Now, in one of our last videos, we spoke about Linda Bradford Ratchke's quote, "All you need is one pattern to make a living." And I received a lot of questions about that video. And I emphasized the importance of Bruce Lee practicing one kick 10,000 times. And I emphasize the importance of not trying to take 10,000 kicks once and hope for a good result. Meaning that you only need to be really good at finding or hunting one setup to make more money than you know what to do with. Yet instead, a lot of people will just go to the market every day trying to take trades. And unfortunately, that never really scales their trading business up in size, but they go to the screen each day catching trades or getting trades. In the ACB Masterclass, we focus on trade setups that have the potential to be hold till close. And a lot of traders asked, well, you showed the shorting setup, but you didn't show any of the long setups. And the exact same thing happens in the long direction with the same application, the same process. And I emphasize to traders the difference between taking trades and scalable trade setups that have the potential to be held to the close that can significantly compound your trading account, but also be scaled into. And there's a reason why you scale into these is because they're not coming back. And I talk about zero thinking. It's about executing the trade, placing your entry into the market. If you're scaling in, adding additional positions in, placing your stop loss in place, going to break even, and then walking away, because the market is going to the close of the day on these particular setups. Traders talk about using an EMA to the close and everything else, and you don't need to, because these are going to the close of the day. There's a reason why they go to the close of the day. And one of the things that traders don't want to be doing on these days is trying to counter trend a market that is going until the close of the day to close at the extreme, whether it's at the lowest price or near the lowest price of the day, or at or near the highest price of the day. Now, this is the type of setup that I'm hunting. Now, we're obviously not going to get these every single day. But in between, what I don't want to be doing is trying to trade markets that offer less than 50-50 or not even an edge in the market, as opposed to hunting setups or being willing to sit on my hands and execute a setup that can offer in excess of 10 to 1, which is scalable and far outweighs any garbage 50-50 or 30-70 or 10-90 type of market conditions. So when I look at markets each day, I'm looking for that pattern, those two patterns, one of those two patterns to present. And if I don't have that pattern, am I really interested in trying to catch a move or grab the high or grab the low? Now, I'm inside of a range. We're looking at today's NASDAQ. And yes, it's tradable. I'm sure we can trade the market and trade the movements and measure little gaps and areas and sweeps and hunts and catch moves. And we can still do the same process: entry, stop loss, and a take profit level or a break even level, and then take profits. But one of the questions I always ask myself is it worth my energy and time to get involved in a market? And if I am, I'm going to nail and bail, meaning I'm going to execute the trade, I'm going to take profits, and then I'm going to walk away, because this is a market that is inside. It's trapping traders. And if we go back and we look at our previous chart that we just looked at, where we have a larger asymmetrical risk-reward opportunity, whether it's a shorting opportunity in a very well-engineered geometrical template for selling high and holding till close, or a very well-engineered dump and pump template for buying and holding till close that is scalable in size. So if I'm inside and I'm in a different type of template, again, if that's not my setup, the two questions I want to be asking myself are, A, is this a market that offers me any edge at all, even a nail and bail? B, do I want to go to the next instrument and take a look, or C, not even bother wasting my time at all and just sitting on my hands and waiting until one of the instruments in my basket present with one of those two templates for either selling high or buying low. Now I can go to another instrument and I can see that there were session opportunities in the London window, and also inside of the previous day's range. Does it have my asymmetrical money-making template in place, or was this just an instrument that offered a session trade and now I'm done and I walk away? Now yesterday, DAX traders in the London session had a fantastic opportunity for an ACB trade setup that was a hold till close. Now if we go back and look at our selling template, that looks very similar, just a different subtle variation of a sell high that offered great asymmetrical risk reward greater than 10 to 1 for traders in the London window. Now for traders in the London session, this trade offered an ACB asymmetrical risk reward opportunity, placing the entry stop loss, going to break even, and then walking away. There's zero thinking, zero emotion, zero stress, and zero management. And these are the types of trade setups that can significantly compound a trader's account. So when I'm going to the screen each day, there's two decisions really. Number one, do I have a setup? And if not, next chart. And number two, if I do have a setup, is it a nail and bail type of opportunity or a set and forget, walk away because it's scalable in size and there's zero thinking, zero emotion, zero stress, and zero management. These are the types of trades that can offer traders significant opportunities to compound their trading accounts. Trading on little 1-minute charts every day and catching moves and grabbing pips or catching a move, really realistically, is that scalable? Really scalable. I mean, really scalable in size. Now, this is a trade setup that is month money, and in some cases, with some traders, could be year money. Linda Bradford Raschke said, you only need one pattern, one trading pattern to make a living. Now, this is the same pattern, just flipped upside down, whether we're selling or buying. Now, one of the hardest things for traders to do is not take trades. They like to trade every day. They treat it like a job, and they believe that they need to make money every day. In their mind, this is the type of trade they're taking every single day, when in reality, some of the days they're trading are just science projects. Yes, there's moves, and we can grab the low, we can grab the high, but is it really scalable, or am I just getting a move and nailing and bailing on a very narrow range, or 50-50 types of market conditions? Can be stressful, hard to scale up in real size, offer, a little bit of an edge, and really for the most part are just for really, really, really smart traders. But if we go back to the larger templates where we enter the market, we place a stop in place, we go to break even, and then we walk away, and the market is hold till close. It's not coming back. And what that means is that you can scale into these opportunities. Now, they're not going to show up every single day, but when they do show up, they're the trade opportunities, the trade setup opportunities where traders can significantly compound their account. Now, you execute the trade, and a lot of traders will trade this with the same risk as they will this. They'll trade it with 1% risk. Now, virtually, you've got like a 1-to-1 maybe risk reward in this particular situation. It's choppy, and the question, as I always challenge myself with, is how much size would you really be willing to put on this type of market conditions? Yeah, you can get the direction right, and I told you it was going here, and you bought it here, and you took the trade, or you sold it up here, and you got out here, and sure, it offered you a nail and bail opportunity, but realistically over time, how much size would you want to put on trades like this as opposed to a trade setup like this, or a trade setup like this, or a trade setup like this? And it's hard for traders to sit back and just sit on their hands and wait. And a lot of traders are just going to markets each day to trade them. They want to trade their favorite instrument, or they want to just trade markets or trade something that's moving. And unfortunately, in the majority of cases, most of those traders are 50-50 over time at best. And that's a hard pill to swallow. But when you get opportunities that are scalable, you realize that it's worth sitting on your hands and hunting or sifting through a basket of instruments and being patient and just waiting for the opportunities that present. Now, I talked about this before. It's repetition that gives them the edge. The same setups over and over again that can turn you into the silent killer with your trading. The market is full of noise and distraction, and I talked about the reference of being like a kindergarten school at playtime. It's chaotic. I caught this move. This pair's moving. I traded this in London. I caught that move in Asia. This pair's moving in the US window. It's at all-time highs. I'm going to short it. Just stuff that creates chaos and mental clutter and verbal diarrhea in a trader's mind. The only thing that a trader can control is themselves in an uncontrollable environment. You need to focus on one style of setup and you need to master it. But you want to master a setup that actually offers you edge, real edge, in an environment where, for the most part, the odds are significantly stacked against you. Every single day should be focused towards getting better at that style of trading, regardless of how you choose to trade. You should have entry requirements that must be ticked off before you take a trade, and every trade should be pre-planned, which is why I emphasize the importance of hunting setups. Setups, though, where you can make a lot of money. If I haven't planned for the trade, I won't take it. I don't care how good it is. I don't care how good someone else says it is. If it's not my trade setup, why would I want to take that trade? Now, if this is my selling setup and this is my buying setup, and the market's already left the station maybe in an earlier session, does that mean I need to chase the move? Sometimes it may offer us a continuation or a low-hanging fruit opportunity, but traders in the London session may have already taken that trade. Or I may have had a continuation trade coming out of a large move from one of those templates for a session opportunity. Or I may have a nail and bail. It gives me a decent trade setup on the day, but it's not my overall large move. It's a session trade, which means if I take a trade and I have my pump and dump or dump and pump template, I want to lock in the money and walk away. I don't want to try and keep trading in a market or an environment that potentially can put me on tilt or there is no edge. The goal is to only take trades when I have my edge or when my opportunity presents. Otherwise, I want to sit on my hands and wait because everything becomes 50-50, 30-70, or 10-90 in favor of the market. I know there will be people who tell you otherwise and that you can learn how to trade every little move on a smaller time frame, but realistically, I don't think that I'm very good at that. So I want to stick to trade setups where my pattern shows up, where I have very large asymmetrical risk-reward potential, very little stress, very little emotion, very little thinking involved, and for the most part, no management. It's a hold till close opportunity. Have a basket of instruments large enough that potentially I'm going to find this setup, whether I'm buying or selling, and the same thing goes for the opposite. So if I can get 3 or 4 of these opportunities a month and they're scalable in size, I want to make sure in between that I don't engage in impulsive, irrational, emotional impatience and self-sabotaging behavior. Leave lower probability days on certain instruments to the experts. Let the experts trade these movements and stick to trade setups that rinse and repeat and are scalable in size. Keep things as simple, scalable, and reproducible as possible where you have a larger edge in the market that can significantly compound your trading account. Keep it simple, traders. Have a great day, and may the markets go with you.